folks, welcome back to Soaring Profits. As always, I'm Patrick, and we're going to dive into some of the market information today. Today we had the release of the Producers Price Index. We have it up here. This is counter to the Consumer Price Index. And the Consumer Price Index is what us as consumers, we think inflation is going to be doing. This that was released today is a little bit different. It's what the organizations and the companies that are responsible for producing products. So it's your toilet paper companies, your wood manufacturers and finishers, and everything from fart to a clap of thunder. They cover all kinds of different things. And where we are right now, if I can bring your attention up to the screen here, folks, is that we saw month-over-month inflation for these producers at 1.4% in March. That's a 16.8% inflation year over year. This is awful. That's crazy. But I think there's some light at the end of the tunnel. And the reason I say this is that these producers are seeing that they have pricing power. They have pricing authority, that they can raise prices. And where we are right now in the market segment is that the consumer feels that they're getting squeezed out of the market. The producers are saying that they still have a little bit of room to raise prices, but they're running out of runway. Where we are right now at 16.8%, it's not sustainable. However, we're starting to see the pullback in manufacturing, and I think we're going to see this drop slowly. So there's some interesting things here. The market today actually didn't respond the way that a lot of people thought it was going to do. We figured the market was going to freak out. What do we do? How are we going to react to this? Are we heading for a recession? But I think what the market's taking out of this right now is we know that the market is responding to inflationary pressures, but there's some underlying numbers here that are giving us a little bit of hope, okay? So what we're going to do is we're going to take a quick look over here. So again, folks, sorry about the error there. What we're seeing is that, well, this beautiful piece of machinery that we're looking at here is TradingView. This is a software that all of you can download. It's free. They have membership services, but for the most part, it's free. But what we're seeing over here is the symbol. This is the VIX, so this is the Volatility Index, and we saw a 10% fall in volatility. What that's explaining is that the markets is calming a little bit, and it's saying that we're not as fearful. We're not at peak fear like we were, even though this PPI came in, the Producer Price Index. Easy for you to say it 10 times fast. But where we are in this right now is we're seeing that everyone thinks that this is top peak inflation fear. At 16.8%, it really doesn't get much higher, okay? But when we look down here and we see the response, again, the S&P 500, we had a brief conversation yesterday about it, and then the NASDAQ, okay? So when we look a little bit closer here, let's move this in on the 1 month, on the 1 day. We're going to be able to see that the market is bouncing and it's gathering some support at for this one here, the US 100, 14,000 running up all the way up to the 14,250 range, okay? So what we're seeing now is the markets is telling us that we've went through nuclear threats, we've went through consumer pricing problems, and inflation is not a product of anything other than the sentiment of the consumer. If the consumer thinks that today I can buy X commodity, whatever it is, a widget, but tomorrow it's going to be 10% more, right? They buy now. That creates upward demand. So where we are right now is that we're starting to realize, the market is starting to realize that the consumer is running out of cash. The producers are realizing that they're running out of cash, and what we're doing is we're hitting an influx, and we got to have something give. And the market right now is counting in that we're going to see weakness, but it's not going to be the devastation. Is it going to be the recession stuff that we've been talking about? The market's kind of saying no. And this information today, like I had talked about a little bit earlier with the CPI, the information that we're garnering right now is very tumultuous. It's telling us all kinds of different things every day, and it's ever changing. So what we've got to do is we've got to react to that. So where we are right now, the market is giving us the information that we we're looking at buying. Okay, so let's take a look at some of the stocks here that would be, powerful movers on the day. So I'm going to go to some of the tech sector, something like a Tesla. Let's pull up a Tesla. Tesla's one of my favorites, and most people are. So Apple on the day, up 1.63%. You can see where I'm looking at this. Apple, everyone's got a phone in their pocket, right? CRISPR Therapeutics. This is an mRNA technology company that's working on gene editing and splicing. Very interesting stuff. Long-term process and long-term product. But you can see that these ones. There you go. Did we lose that for a second?
Nope.
Okay. So CRISPR Therapeutics again there. Let's go to some of the commodities, some of the consumer products, right? So you've got Under Armour. Okay. See this big run up? Had $18 a share stock back in March. And then what do? We had terrible inflation. They were concerned about how much money the consumer had. And it bounced off. This line here is your 20 period moving average. And this one here is your 200 moving average. Okay. So these averages over time, they equal out and they create pivot points for the stock to be able to bounce off of. So right now, we're seeing a little bit of weakness. However, the stock is up almost 2% on the day. Now, I want you to think about that. 2% when we think about this is not a huge amount of money. But if you have a multi-billion-dollar company, it's a massive amount of influx of cash. So what the market is saying on these mostly green NASDAQ days is that, hey, folks, we've got some stability in the market. We're starting to see some cash flow back. And that can be very stimulating for business. NASDAQ, like we've talked about before, they usually end up being heavy debted companies because they're tech. They're tech heavy. They're tech centered. Okay. So when we see some of these NASDAQ holdings, like again, the QQQ, which is the NASDAQ ETF, the Invesco Trust series, at 2% today, right? That's the in total market. So I would say right now we're going to test some of the thresholds that we've had, but I think that there's some light at the end of the tunnel. Even after a somewhat devastating PPI reading, the market wants to make some money, baby. So like always, thank you very much for joining us with Soaring Profits. My name is Patrick, as always, and let's make some money together, folks. Thanks again for joining us.
Hey, James from Soaring Profits and Pat over here. Aren't those two great looking cartoons?
Now, with that being said, folks, obviously we are not financial advisors, and we're certainly not your financial advisors. We don't know your risk tolerance. We don't know if you got money in the bank. We don't know what your situation is. So when we're having these discussions, we appreciate you tuning in. However, have some discretion. If you make $1 million with us, we're glad to have you. If you lose $1 million, that's on you as well, folks. Let's work together. Let's make some money, and we'll go from there. Thanks, guys.